What if I told you that Ripple's CEO just went on record predicting new all-time highs for crypto in 2026, and XRP is positioned to be one of the biggest winners? While Bitcoin and Ethereum are bleeding billions in institutional money, XRP just absorbed over $1.3 billion in ETF inflows in just 50 days. But here's the crazy part: the price hasn't exploded yet. That disconnect is creating one of the most explosive opportunities we've seen in years. Stay with me, because by the end of this video, you'll understand why institutions are secretly positioning themselves before the retail crowd catches on. Before we dive deep into this bombshell, smash that like button, drop your price predictions in the comments, and subscribe for more XRP content. Let's get into it. Brad Garlinghouse just made waves at the World Economic Forum in Davos, Switzerland. The Ripple CEO didn't hold back when CNBC asked him about crypto's performance in 2026. His response: "I'm very bullish, and yes, I'll go on record as saying I think we'll see an all-time high." This isn't just some random prediction from a crypto influencer on Twitter. This is the CEO of one of the largest blockchain companies in the world, with direct insight into institutional adoption, regulatory developments, and real-world utility that most people simply don't have access to. But Garlinghouse didn't stop there. He specifically mentioned that regulatory changes like the landmark Genius Act have unlocked a lot of activity in the space. Remember, this is the same legislation that's designed to give stablecoins the framework they need to scale in a very big way. And guess what Ripple has? RLUSD, their stablecoin that's already being integrated into payment corridors across Asia, particularly in Japan and South Korea, where regulatory frameworks are more supportive. Now here's where things get really interesting. While Garlinghouse is bullish on the entire crypto market, XRP has a unique advantage that most other cryptocurrencies simply don't have. Institutional money is flowing into XRP at a pace that's absolutely staggering. In December alone, XRP ETFs pulled in $483 million. To put that in perspective, Bitcoin lost $1.09 billion, and Ethereum shed $564 million during the same period. Institutions were selling Bitcoin and Ethereum while simultaneously buying XRP. Let that sink in for a moment. These aren't retail traders panic buying on Robinhood. These are pension funds, endowments, insurance companies, and sophisticated institutional investors who do months of due diligence before making allocation decisions. They're not chasing hype, they're positioning for what they believe is coming next. And what they see is regulatory clarity, real-world utility, and a payment infrastructure that's already being used by financial institutions globally. Speaking of regulatory clarity, let's talk about the elephant in the room that nobody's discussing enough. Garlinghouse expects meaningful United States regulatory legislation to pass in the first half of 2026. This isn't speculation. President Trump already said he hopes to sign the crypto market structure bill very soon. The Genius Act is moving through Congress. The SEC under the new administration has already dropped lawsuits against Coinbase and Kraken. The regulatory headwinds that crushed XRP's price for years are finally turning into tailwinds. And here's the part that should make every XRP holder sit up and pay attention. Ripple has applied for a United States bank charter. If granted, this gives XRP additional legitimacy that makes it exponentially more attractive to large institutional investors who couldn't touch it before due to compliance concerns. We're talking about pension funds, endowments, insurance companies, the type of institutional capital that measures in the hundreds of billions of dollars. Once that floodgate opens, the supply-demand dynamics change dramatically. Let's talk numbers for a second, because this is where the math gets absolutely wild. XRP currently trades at around $1.89 as of today, January 26, 2026. It's down significantly from its July 2025 all-time high of $3.65. But here's what most people don't understand about the current price action. Exchange balances for XRP have dropped 57% from 4 billion tokens to just 1.7 billion in 2025. That's one of the largest annual supply reductions on record for any major cryptocurrency. What does that mean in plain English? It means that available supply is drying up while institutional demand is accelerating. This is basic economics. When you have decreasing supply meeting increasing demand, price has only one direction to go. The question isn't if XRP will pump, it's when and how high. Standard Chartered, one of the world's most respected financial institutions, put out a price target that shocked the entire crypto community. Their analyst Jeffrey Kendrick projects XRP could reach $8 by the end of 2026. That's over a 300% gain from current levels. Some might say that's impossible, but let me break down their methodology because it's based on cold, hard math, not hopium. If XRP ETFs maintain their current pace and attract $10 billion in total inflows throughout 2026, that capital would need to purchase approximately 4 to 5 billion tokens at average prices around $2.20, combined with the existing 45% decline in exchange balances. This creates substantial supply-side pressure. When institutions are buying 4 to 5 billion tokens and exchanges only have 1.7 billion available, where does that extra supply come from? Either the price goes up until holders are willing to sell, or institutions bid against each other, pushing the price even higher. But it's not just about ETF inflows. CNBC's Power Lunch host Brian Sullivan noted that the hottest crypto trade of 2026 isn't Bitcoin, it isn't Ethereum, it's XRP. The token has now established itself as the third largest cryptocurrency by market capitalization, and it outperformed both Bitcoin and Ethereum in the first week of January, surging 25% while Bitcoin gained 6% and Ethereum rose 10%. Now let me address something that's been circulating on Twitter that has the XRP army absolutely buzzing. Brad Garlinghouse has been liking posts on XRP about XRP millionaires and wealth redistribution. One supporter posted a message encouraging people to give back when they become XRP millionaires. Garlinghouse liked it. Then he liked another post within 24 hours where someone said he's not worried about the dip. The XRP community went into a frenzy trying to decode what this means. Now, I'm not saying a Twitter like is a price prediction, but think about it logically. Why would the CEO of Ripple be engaging with content about XRP creating millionaires if he didn't see significant upside potential? CEOs of major companies are extremely careful about their social media activity because of regulatory scrutiny. The fact that Garlinghouse is comfortable liking these posts tells you something about his confidence level in XRP's future trajectory. Here is another catalyst that's flying under the radar. Garlinghouse mentioned at Binance Blockchain Week that major financial firms including Franklin Templeton, BlackRock, and even Vanguard, which once refused to touch crypto, are now entering the space. Vanguard was notoriously anti-crypto for years. The fact that they're changing their stance is a massive shift in institutional sentiment. And when BlackRock enters a market, they don't dip their toes in the water. They bring billions of dollars in capital and institutional infrastructure that transforms entire asset classes. There's also talk about a potential BlackRock XRP ETF filing, which would be an absolute game changer. BlackRock's Bitcoin ETF became the fastest growing ETF in history. If they launch an XRP ETF and market it with the same intensity, we could see inflows that dwarf current numbers. Remember, crypto still represents just 1 to 2% of the global ETF market, according to Garlinghouse. The potential for growth is absolutely massive. Let's talk about real-world utility, because this is what separates XRP from meme coins and speculative tokens. Ripple's on-demand liquidity service is already being used by financial institutions to move money across borders in seconds instead of days. RLUSD is scaling on banking rails in Asia. Japan is integrating RLUSD with actual bank corridor volume, not just pilot programs. This is real adoption happening right now, while most people are focused on price charts. Monica Long, Ripple's president, told Bloomberg that the company's November fundraise at a $40 billion valuation was very positive and favorable for Ripple. While there are no immediate plans for an IPO, the fact that sophisticated investors valued Ripple at $40 billion speaks volumes about the company's trajectory and, by extensions, XRP's future. Now let's address the current price action, because I know some of you are concerned about the recent dip. XRP is currently consolidating between $1.88 and $1.95. The token recently slipped nearly 4% as Bitcoin fell below $88,000. But here's what you need to understand. Spot XRP ETF saw about $40.6 million in weekly outflows, but this isn't institutions losing confidence. This is profit-taking and rotation, which is completely normal after a 25% surge in the first week of January. The support level at $1.88 has held multiple times, forming what technical analysts call a triple bottom support zone. Each test has attracted buyers. Resistance sits around $1.93 to $1.95 in the near term, with a more significant descending trend line closer to $2.10. The fact that XRP is compressing rather than breaking down suggests that buyers are absorbing selling pressure and building a base for the next move higher. Goldman Sachs predicts the Federal Reserve will implement 2 more rate cuts in 2026, bringing interest rates down to about 3 to 3.25%. Lower rates make risk assets like crypto more attractive because the opportunity cost of holding them decreases. This is the same macroeconomic environment that fueled crypto's massive rally in 2020 and 2021. We're seeing similar setup conditions now, but with one major difference. XRP has regulatory clarity that it didn't have back then. So what's the bottom line? Brad Garlinghouse is predicting new all-time highs for crypto in 2026. Institutions are buying XRP while selling Bitcoin and Ethereum. Exchange balances are at historic lows. Regulatory clarity is improving dramatically. Real-world utility is expanding with RLUSD and on-demand liquidity. Standard Chartered projects $8 by year-end. And the supply-demand dynamics are setting up for a potential supply shock that could send XRP significantly higher. The question you need to ask yourself is this: are you positioned for what's coming next, or are you going to watch from the sidelines and regret it later? This is not financial advice, but the opportunity in front of us right now is massive. The institutions know it. Brad Garlinghouse knows it. The question is, do you? Make sure to smash that like button if this video added value. Drop your XRP price targets for 2026 in the comments below, and subscribe for daily XRP content that keeps you ahead of the curve. The XRP army is stronger than ever, and 2026 is shaping up to be the year we've all been waiting for. Let's get it.